We are just about 7 minutes before the opening bell. Let's bring in SlateStone Wealth senior market strategist and a CNBC contributor, Kenny Polcari. Kenny, good morning. Obviously, you and I, everybody looking at this kind of relentless rally. It's orderly. It is really not really given a chance people to buy dips and pullbacks. Only question is, has it stretched a little bit too far, or can you bet that it keeps rolling?
Listen, I thought it stretched a little bit too far 2 weeks ago, right? I mean, I've actually been expecting. I thought 3,300 was going to be where we actually hit resistance. We tried it a couple of times. We backed off. And then yesterday, we blasted right through and landed solidly on the other side. And again, this morning, look, the markets are up again. Global markets are up. China came out with a fairly decent report, right? Although they're saying 6.1 is the slowest in 27 years or whatever, the fact is it is growing at 6.1 in the middle of what was this ongoing trade war crisis that was going to bring the global economy to a halt. It's done nothing like that. And so now we've got trade 1.0. We've got China growing. We've got robust U.S. economic data. You've got great earnings so far. And so, the sky's the limit.
So in other words, a lot of the stuff we were worried about seems like we didn't need to be worried about it. Right now, we're almost up 3% year to date for the S&P 500 if we open right here. Most of the strategists out there were saying, we're probably only good for about a 5 or 8% full year. And we're only 2 weeks in. So what does that mean for the dynamic, people trying to either chase it or upgrade where they think this market could go? And also, how do you treat the first pullback whenever it does come?
So here's what I think, because I'm in that camp where I really kind of thought this year was going to, if we got a 10 to 12% return all in, right, once you add in dividends, total return, I thought that would probably be about where we are. And you're right, we're already up 3%. We're not even done with January yet. We still got another week and a half to go before the month is over. But I think you have to, it depends again on who you are, right? You're the long-term investor, you got to stick with your plan, right? So whether it's consistent investing, monthly, quarterly, set, however you do it, you should stick with that plan and eliminate the noise around you. Look, when you just asked me, we were all concerned about all these issues going forward. But in fact, we were concerned all of 2019, and the market just kept going higher and higher and higher. It never really pulled back, and it doesn't feel like necessarily today it wants to pull back either. That being said, when the market does pull back, I think there's going to still be plenty of demand, but depending on the speed at which it does, remember, it's all algo driven, so the buy side will back off a little bit. They'll let the sell side come in. The market should shake the branches a little bit to get everybody to see where everybody stands. But then I think the market's in a very good place.
All right. We'd be in a good place if we shook out a little bit. Kenny, thanks a lot. Good to see you.